Hello, Maverick traders. This is Rob, and it is May 2nd. Let's get into it. We are one day ahead of the Fed meeting, and it is likely to be a big trading day tomorrow. That being said, today was not a bad trading day whatsoever, but I gotta say it was a little bit weird when you take a look at the correlations. If we look at the news, we had a couple things happen. Bank stocks fell. There's more banks that could likely be in trouble, so equities actually fell pretty badly. Then we saw gold actually has a very nice bounce off the bottom. We'll take a look at a chart here in a second. Likely to break out. We had weak CAD, but we had strong yen. So we had things that really broke down the correlation of the risk on, risk off move. And I really think it's just people trying to settle up positions and square up going into the FOMC tomorrow. So we take a look at the performance. We see that the equities, the SPX and the VT, were down about just over 1%. But crypto, which is positively correlated with stock market indices, actually had an up day. Again, another correlation that broke down. Gold had a very nice day, but then take a look at oil. It did not follow along with gold. It actually cratered 5.6%. So if we take a look at charts, here is the S&P, and you can see that we came up to that resistance level right around that 4170 area. We spiked above it yesterday, and then we came down, and we came down pretty hard. That being said, we're still just in a range. So we're just in this range of 4060 up to 4170, maybe 4180 at the very top. Until we break out of this, equities are more neutral than anything, not really helping us out one way or the other. And we come over here and take a look at gold. Gold had a nice spike up to 2040. We've had this pullback. Boy, this 1980 was rock solid. Look how many times that was tested. And we finally got this confirmation candle here. To me, I think gold is going to take a run at least 2040. Now, if this was a regular week without an FOMC, I would actually really like to be long gold, gold stock, stuff like that. However, running into the FOMC, tomorrow, everything can change. Whenever you have a major news event, you kind of have to throw charts away and understand that with new information, people are going to take new positions, not based on charts, but off of the new information. If gold does break out above 2040 after the Fed, I think you definitely want to be long in gold and silver and all of the metals. And then we come over here to the bonds, and the bonds are kind of doing the opposite thing. The bonds are actually down at the lower end of their range, right here, 3.4% on the US 10-year bond. I think if gold breaks higher, it's because bonds broke lower. I'm going into this meeting based on the charts that equities likely run higher, gold, silver run higher, the dollar and bonds fall lower. That's the premise I'm going into tomorrow. I'm not betting on that premise until the report comes out, and I will take positions after that. But that is the premise that I'm looking at going into tomorrow. So if we take a look at the currencies today, what happened? Well, cryptos were up 2% across the board, and really nothing really outshined the other. Ethereum a little bit better, but boy, this is pretty close. They all went up about 2%. In the world of currencies, take a look at this CAD. This CAD was the real outlier today, and that really was because oil broke down some pretty big support levels. And there's been some calls for oil to go back down into the 60s. The CAD definitely did not like that. Other than that, we didn't really get moves that made a whole lot of sense based on the risk off of today. Today was risk off, so we got yen went higher, which it's supposed to in risk off. But then we got the Kiwi and the Aussie that also went higher. They're not supposed to go higher in risk off. As you can see, the euro and the Swiss franc basically held in there. We've liked those two currencies the best, and we're definitely going to be watching those two currencies during tomorrow's FOMC statement. So we're still at a +2 in equities. We still think the equities are more bullish than bearish. Tomorrow, if we break out above that 4170, then I think we have to go to like a +3, where we're even more bullish. Take a look at this calendar for the rest of the week. This week is packed. We have so much information coming out. So tomorrow morning, we have services PMI. That's actually going to be a mover right ahead of the FOMC. Now, Mavericks, we are going to be meeting live during that. The estimates are they are going to raise 0.25%. That's pretty much baked in. So I don't think there's going to be much movement on the announcement at 2 o'clock. But you can see at 2:30, we have the press conference. This is where I think the fireworks are going to be in the press conference. So I think you want to wait until the press conference before taking any positions off of that first move. Then on Thursday, morning, we have the ECB. So we're meeting live for that one as well. We'll be trading that one. Estimates are they're going to raise 0.25% as well. We'll be meeting for that press conference at 8:45. Then on Friday, we have more fireworks. We've got employment reports from the US and Canada. We'll be meeting live for those as well. So lots and lots of trading opportunities this week. So let's go and look at the currencies and rank them from top to bottom and see where we're going to be focusing our trades for the rest of the week. Let's start off with the cryptos. So as you can see, this is Bitcoin. Bitcoin is sideways. It is pretty much sideways. We broke out, failed, and we retested it twice. We're just simply back down on this range. So until we get a breakout, there is absolutely no trade to be had on Bitcoin. Same with Bitcoin Cash. It's not really going anywhere at the moment. You can see a lot of sideways action. Ethereum, all we did was bounce off the bottom today. We did not start any new trend whatsoever. Litecoin doing the same thing. So cryptos are really neutral here. There really is no trade to be had on them. Let's jump into the dollar. Now the dollar, of course, is going to be the currency that is in the most focus tomorrow with the FOMC statement. As you can see, we are trading between a range. Now this is our proprietary dollar basket that we use at Maverick, and you can see that we're at the top end of the range. So right away, when I look at this on a technical basis, I'm thinking if we're going to stay in the range, the dollar is likely a better sell than a buy here. Now, of course, the FOMC could change everything tomorrow. We could break out. We could break out to the upside, and then I would have to say on a breakout to the upside, I want to be more long dollar than short dollar. But I'm going into the report building short dollar trades to get ready. If we do get a move down on dollar, I think that is the trade you want to take. I'm going to have to adjust. Let's say that I'm ready for short dollar trades. The FOMC comes out and the dollar spikes. I'm just going to have to throw away all of the trades that I built and was ready for, and I'm going to have to change and say, okay, obviously dollar is more on the long side here. I'm looking for pullbacks and bases in dollar. We won't know anything until we get to the Fed meeting tomorrow. We take a look at the yen. The yen got absolutely hammered last week off of the Bank of Japan news. All we got was a bounce up today. All this is today is a bounce. We broke down very severely on these levels. I'm simply waiting for an opportunity to short yen. We're getting a nice little bounce here. I would love for the yen to come up a little bit higher. And then tomorrow, if we get a move up in dollar, I want to be long dollar yen. That's going to be the primary place I want to be on strong dollar tomorrow. We go in here and we take a look at the euro. Euro is just kind of mellowing out. We had a nice run, and now we're just doing this little mellow move lower. It's not steep at all. I highly suspect that the euro is going to strengthen, but I'm not really going to make any move until tomorrow. Swiss franc is doing the exact same thing as the euro, so those two are going to be the ones I'm also watching. I'm liking these. If the dollar is weak, I'm liking euro and Swiss franc on the long side. Pound got hit today about 0.5%, but you can see it's really just giving back its recent gains. Technically speaking, in the short term, there's more momentum to the downside. But if the European currencies strengthen tomorrow, you'll see this pound bounce back nicely. Now, the CAD is a currency that we have not liked for trading for a while. I mean, take a look at where it's been in this range. It's been in this long range here. I mean, this is less than 3% of a range. That's not a lot of movement. So we're right smack dab in the middle. I am uninterested in CAD. It's going to go on the shelf. I'll take it out later. Taking a look at the Aussie. All right, so the Aussie has been weak as of late. And so whenever something is in a downtrend, we love to short rallies. We love to short these rallies. Look, we don't know yet if this last little spike was a great opportunity short like it's been here and like it's been here. Tomorrow, we will know that. If the dollar strengthens, I think you could really look at a Aussie dollar short as well. I'm not looking at dollar strong after the FOMC, so I'm not really looking here whatsoever. If we take a look at the Kiwi, it's doing the same thing. It's in a big downtrend. We've had this big bounce up. The question is this a great shorting opportunity? At this point, we do not have a trend change signal. So you still have to treat the Kiwi as a downtrend. And you can see we've rallied all the way back up to this major support point, which should become some resistance. For those of you not wanting to mess with the FOMC report, I highly recommend you go look at the Kiwi for a potential short against one of the European currencies. I really like that pairing, and in fact, we will take a look at that pairing. When we stack them up one by one, you can see there's a whole lot in the middle. The only things that are really moving at this moment is Kiwi is the strongest currency at the moment. There's no question about it. We're right up against that resistance point, but we cannot short it there. We have no idea if it's really going to stop. We need to see a little bit more as far as candles go. The weak currencies are the pound and the CAD at the moment. I don't like any trade here because, like I said, the Kiwi's looking the strongest, but I'm looking at the Kiwi thinking it's had this big rally in a downtrend up to a very major support or resistance line. I'm looking at it more as a short, so I don't like Kiwi. So what am I left with? Yen? Okay, yen, but it is simply in a downtrend as well. It's just a bounce in a downtrend. I go look at Aussie. Okay, Aussie's just a bounce in a downtrend. As you can see here, all the strong stuff is this stuff that's been the weakest, having a little bit of a bounce. Until we get major trend changes, I don't want to buy little bounces in downtrends. So at this point, there's really nothing I want to take a look at going into the FOMC meeting. So this is going to be pretty short and sweet because I don't have any charts to go look at because I don't even want to look at anything. Because if I go look for something, trust me, I'll find something. It's very easy to find a trade. I don't want to make any trade until the FOMC, so I'm just going to pack it up. I think the most likely thing to happen is there's not a lot of movement going into the FOMC. Very typical going into the FOMC that the market mellows out, there's not a lot of movement. Wait for that FOMC freakout. We will be meeting live on Wednesday. We're meeting live Thursday for the ECB, and we're meeting live Friday for the U.S. payrolls report. Remember, there's always that freakout. It knocks a lot of stops out right on the announcement. We like to take positions either right after the announcement, after that freakout, or a second stage entry to make sure that we're getting in at a place where we're not going to get knocked out, stopped out of a good trade just from volatility. So we're going to be meeting live. Let's go ahead and make some good pips here this week. There's a great opportunity to make pips this week. So let's go out and grab them. But of course, always be safe, proper position sizing, risk management, all that. We'll see you throughout the week. Goodbye, everybody.